from NBC News World Headquarters in New York, this is NBC Nightly News with Brian Williams.
Good evening. If you don't already know these two funny-sounding names, you're about to hear a lot more about them in the news. Fannie Mae and Freddie Mac are shorthand for Federal National Mortgage Association and Federal Home Loan Mortgage Corporation. They were founded by the government, but they are owned by shareholders. They are not government agencies. Fannie Mae and Freddie Mac make and guarantee mortgage loans. They're big players in the business, in fact, but they've been hit hard in this housing market. Today, their stock price has plummeted, and there are worries they'll have to be bailed out by taxpayers. That was the gist of a story posted overnight on the New York Times website, which said the Bush administration is considering a plan to have the government take over Fannie Mae and Freddie Mac. That sent the stock market on a wild ride. A day that included rumors that the Federal Reserve would help the companies out. That ended with more uncertainty. Tonight, CNBC's Trish Regan starts us off.
Concerns today that the essence of the American dream, home ownership, could be threatened.
Freddie Mac and Fannie Mae are very important institutions.
Fannie Mae and Freddie Mac are the backbone of the U.S. mortgage market, holding roughly half of all U.S. mortgages. They guarantee the majority of U.S. mortgages held by most banks.
They are the reason that we have one of the highest housing percentages, people in their own homes of any place in the world.
Fannie and Freddie were created by the government to stabilize the mortgage markets. They're privately owned, but so big that investors have long assumed the government would step in if there were a problem. And investors fear that problem could be on the horizon. The company's stock price is off more than 85% since the credit crisis began last August, with investors worrying a deteriorating housing market may force the government to go into the mortgage business and take over one or both companies. Together, Fannie and Freddie guarantee more than $5 trillion in debt, roughly half the size of the entire national debt. So far, they've lost $11 billion tied to bad loans, a small percentage of their loan portfolio. The fear, if foreclosures continue to rise, Fannie and Freddie may not have enough money on hand to stay in business. Both Freddie Mac and Fannie Mae say they have enough capital to meet this crisis. So what does this all mean for the average homeowner?
The bottom line for homeowners and mortgages is Fannie makes their mortgage payments lower. If Fannie and Freddie go out of business, the cost of mortgages is going to go up.
Higher mortgage rates likely mean lower home prices, which is why most believe the government would have to bail them out, putting the burden on taxpayers, but preserving an American way of life, the family home. Trish Regan, CNBC, New York.
For more on all of this tonight, Wall Street veteran Jim Cramer is here with us. He is known these days, of course, as the host of Mad Money on CNBC. Jim, this is an uneasy feeling Friday night going into an uneasy feeling weekend. The last time this happened, we woke up Monday morning, there was no Bear Stearns. How do you see this?
I think this one is a more optimistic scenario. I believe that the president changed his position today, distanced himself from that New York Times article which talked about nationalization, and I think we're not out of the woods, but things are better after today's action. These companies will exist and they will continue to be publicly traded.
Now, tonight, in just the few minutes it took us to walk from the newsroom to the studio, Wall Street Journal tonight online reporting IndyMac, a bank out of Pasadena, $19 billion in deposits, shut down by federal regulators, one of the largest bank failures in U.S. history. And this bank helped, as you know, fuel the mortgage boom. What do we make of that news?
This is a true run on the bank. This is one of those situations where people lined up to take money out. This was an aggressive lender, some would say reckless. This is the beginning of the closing of real banks that have had a great deal of what I would regard as being exposure to the last 2 years of very hot markets. This is worrisome, but it is not as bad as if anything were to really happen to Freddie and Fannie. Brian, I am telling you right now, Freddie and Fannie are too big to fail. The government will not let it happen.
All right. Well, watch this over the weekend. Something tells me we may be talking to you again on Monday night. Jim Cramer, thank you as always.